Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, December 16th, 2022. It's 9:43 a.m. Eastern Time as I'm starting the video, and feeling a little bit better. I'm pretty sure I turned the corner last night, so I'm able to do a video now. I was kind of on my butt all day yesterday, so sorry I couldn't get a lot out to you. But there really isn't a lot new to report. The most important thing, and I just want to highlight it, that happened recently, the most significant technical development yesterday, we had solid breaks below the recent trading range. Remember, I've been highlighting this. Even anticipated it ahead of time. Told you leading up to the Fed in the month of December, we'd probably grind around, and so we did. We set up in this trading range, and we had opportunities to short the top of the range, swing down. We had a couple buys off the bottom of the range, and then the most recent highlighted short entry wasn't even. You can't even see it here on the daily chart because it happened in pre-market. We had a perfect tag. There was a spike right up into the downtrend line and the 200-day moving averages in QQQ, and again that was highlighted at the time just the other day. So from there, for those that took that short, I can't grab the line or it moves. I'm just going to grab at that same level right here and tell you where we're at so far. That's and the day's just started right now. It's a 4-day drop of about better than 8.5%, so not bad. Now, again, that's also, well, that was mentioned as both a fade trade for a quick pullback trade for active traders, or more importantly, I think I've been back into swing trend trading mode in long-term accounts. We're scaling in, as I mentioned, on the more busy board, my most likely bounce target zone, and that was again not reflected here, but there's the downtrend line. We hit right smack in the middle of it. So here's where we're at, and this is important to note. Today is a quadruple witching day. That means we have a ton. There's $4 trillion of options expiring today, so there's a good chance we're going to see volatility. And volatility cuts both ways. It doesn't just mean stocks going down. They go up, down. And so ideally, you want to use volatility to your advantage. Again, I've been posting, and I try to make it very clear. I post active trading ideas. Those are quick trades for 1, 2, 3% profits sometimes on the indexes, and those should have very tight stops. And then I've been talking about swing trading for what I believe to be the next leg down that's coming. And so for those that have been scaling in, the highlighted areas were here at the bottom of the zone and then here in the middle so far. So you'd have an average cost, at least I do, somewhere in the middle there. And I feel like this is where I have the market against the ropes as far as that position goes, because it's comfortably profitable. And we just had some good sell signals yesterday. If you recall, I said this trading range would break one way or the other, and whichever way it broke would most likely determine the next major trend. And so you can see here on QQQ, that was a big level, 280. It broke to the downside, and we're still below there. So what that means is any kickbacks to that level, to 280, and even you can certainly allow a little move back into the range, but ideally, you don't always get what you want. In a perfect world, they'll reject it if you get a back test of 280. Now, you may not get that. That's the other thing. And that's why I like scaling in, because if you're waiting for the perfect short entry, if maybe you share the same thoughts as I do, that this has just been another bear market rally and a larger bear market with more downside to come, but you're waiting for a certain rally up to a higher level before you go short. Well, from my experience, you may never get that. So there are a lot of times I give you hard short entries, hard long entries on breakouts, and there are other times where, when I'm in swing or trend trading mode, I prefer to scale in. So now that I have a comfortable position that's profitable, I can short rallies back into resistance, or we may not get that, and it's a good chance we will. We're not far from it, and there's still this other downtrend line, so this would be an ideal, anywhere in here would be an ideal pushback rally. Now, if we get back into the zone by quite a bit, Now that may prove to be a whipsaw, just like this was a whipsaw. That was, coming up. What was that? Fed day or the CPI numbers? Again, forgive me, I'm still kind of foggy-headed from the flu, but that was a big spike and a pre-market spike there. It was on the, I think, cooler than expected CPI, but it proved to be a whipsaw. And hey, maybe this proves to be a whipsaw. And that's the thing about trading. There are no guarantees. You just adjust and adapt. So if we get too far into the zone, that's not good, because once you have these sideways zones like that and you have a breakdown, but then you re-enter it, you usually go back to the bottom, or in this case, back to the top of the zone. So we'll play it by ear, and for a long-term, swing trader, trend trader scaling in, it shouldn't affect you. At most, you're just going to go back to break even. If we come back up here somewhere like that, and then that can give you another objective level to add on. We already got rejected off the 200-day moving averages once. So, all right, so that's QQQ. SPY is clearly below there. Took it out yesterday. You can see, not by a huge amount. And let me go to the cleaner board that I have and just box in. So there's the recent trading range right there. You took it out yesterday, and now we're clearly below it. So again, any bounce back to the bottom of the range, give or take. It's not as well defined as QQQ, but it's pretty clear there. And same thing holds true with the bounce target zone. We already hit the top of that actually in pre-market, so we had a perfect entry there for those of you trading SPY. Or what I like to do is aligning short trades on QQQ or RTY. I tend to trade those more. You get more bang for your buck with the S&P 500, because there are a lot of traders that trade that, and it's a very significant index. So I like to see, ideally, both QQQ and SPY get rejected or rally into resistance to put on shorts. And that's what we got. So we got so far what I believe could prove to be the optimal entries, almost a near perfect entry for the next leg down. We'll see. I don't want to get ahead of myself. First things first, and that would be to stay below 390, ideally on SPY, and 280 on QQQ. And if that's the case, any extra dry powder I have, I'll continue to add, even if we go down more. Oh, sorry, I had to pause it for a nasty bout of coughing there. So whatever I was saying is, yeah, and any leg down soon, I think we'll start to see this thing snowball. There's a good chance once it becomes apparent that the rally's over to most. And, you look at things like the volume of price histogram and everything else that I've covered. You look at the PPO histogram, for example, also red. I've covered that ad nauseum lately. Every single sector in the S&P 500, all 11, the NASDAQ 100, the S&P 500, the Russell 2000, all flipped recently. That one trend indicator. It's not a be-all, end-all, but it flipped. And then don't forget, for the last several weeks here, or actually a couple months, I've been highlighting the VIX. And all along said the next buy signal on the VIX, which would be a sell signal on the market, would be a break of this trend line, just like we had all these other previous trend line breaks. These were, you wanted to confirm breakdowns or sell signals in the equity markets. When you break down, boom, the VIX usually has an initial pop, pulls back, and then rips. And when there was our breakout, we rallied right up to, I have not modified these levels, hit my 25, 27 target. Right there, first target, had the typical pullback, and again hit that uptrend line I had, same level. And so if this plays out as it did back here, and right here, you can see the breakout. I think you can see that on this video. Breakout, little pullback, close to the breakout level, and then boom, an explosion in the VIX. Breakout, pullback, boom, an explosion. These have been the big legs down right there in the bear market so far, right? And so if things continue to play out the way they have been, then this should be soon. And you can certainly trade the VIX, or you can just use it as confirmation, if you will. And so that's it. I'm not going to spend another 15 minutes talking about all the reasons, because I could sit here and spend another 20 minutes talking about reasons you want to be long. I can always make a case to be bullish or bearish, but right now, like I said, pretty good case to be bearish. But you got to have that, you got to make a strong case. And the reason is the stock market, the financial markets, by their very nature, are overwhelmingly inherently long or bullish. What I mean by that is stocks go up most of the time. Stocks are, are corporations. It's, it's those are shares of companies. Companies grow over time. The economy grows over time. It's growing much more than it's contracting, and then more importantly, the entire industry is geared to long side. There are, I don't know the number, but a lot of mutual funds, pension, public and private pension funds, and whole industry of financial advisors and trading firms, and they are, and just like the general public, almost all longs. The majority of funds out there, mutual funds, etc., and pension funds, they only go long. They only buy stocks. There's people like me that are flexible, that are just as comfortable shorting. There are some hedge funds that do it, and there are some individuals, but not many. And so, as such, you got to be pretty, pretty darn certain, and pretty accurate with your timing, because again, and the reason it's worth it, you might say, oh, stocks go up most of the time. Why not just wait and go long? Well, in a bear market, you can make a tremendous amount of money gaming these zigs and zags. And I also think this one's going to be here to stay for some period of time. So, therefore, that's why I do it. And, also for the simple reason, I've talked about it 101 times before, stocks tend to fall much faster than they rise. You can see here, in just a matter of months, you usually wipe out, or a matter of weeks, you usually wipe out months of gains, and sometimes in just a few months, you wipe out years of gains. And we haven't even really seen this bear market have that kind of impulsive leg down yet. So it's so far been what I would consider, and many I think, a relatively orderly walk down, without any type of capitulation type selling yet. So whether that's coming soon or not, I don't know, but all I can tell you is we've had some objective short entries. I like where we're at right now for the swing short positions. Today being quadruple witching, you're going to see some volatility. It might make day trading kind of tough. I'll see if I see any active trading ops. I'll throw them out there. Otherwise, like I said, I'm going to just wrap this up here, and those are the levels to watch. 280, and again, I don't want to overemphasize them, but that's, I think, probably the most significant levels to watch today. As long as we stay below 390 and 280, 390 on SPY, 280 on QQQ, the case that the bear market rally is over is much stronger today than it has been in quite a while. Okay, I'm right at the 13-minute mark, so I'm going to wrap it up here and get this one out to you. And I don't know if I need to do an update on treasuries. I gave you, the charts on that. Watch that one. We'll see if those, like I said this morning in that post I got out to you first, see if the breakdown sticks. Again, with quadruple witching, you're going to see some volatility, but I think that one looks good. That's one of my favorites right now, and start to scale into treasury shorts right now and add to those today if they clearly, ZB, the long bond futures, and TLT, if they clearly close below those trend lines that I showed you. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.